always talk as an industry and acknowledge that we are really behind the curve. And we should be a bit embarrassed about that. And we should stop almost joking about it and actually start taking real action. The rest of the world is changing so fast, and the real estate space needs to keep up, and it needs to work hard to keep up. But a lot of the technology that we're really focusing on at the moment is very much at the acquisition ends, about how we identify opportunities, how we screen, how the deals come in, how we screen them, do red flag reports to identify gaps in the information, to identify conflicting information. It's not taking over from the role of the human. What it's doing is it's cutting out a lot of the painful work. One of the investors said to me one day, it was like, we can't hold technology to account. But we can hold you to account. It's not about just dropping a single PDF into like Gemini or something, going, Gemini deep research, do my underwrite for me and produce my investment committee memo, and I just need you to look at X, Y, Z.
If you can't defend your assumptions that have gone into a decision-making process, then you don't belong in finance and real estate. And I think the same is true of an AI tool, right? You don't belong here. You need to do the thinking before you give me the output.
Having a centralized and unified data infrastructure, I think, is absolutely essential. It's not the sexy topic. I think a lot of the solutions that we're creating, the PropTech solutions that we're creating along the value chain, will hit a ceiling.
Hello, I am Dr. Kate Jarvis, the CEO of Fifth Dimension, and we're here today for another episode of Bricks, Bites, and Bold Moves, the future of real estate. And I've got here Sam Kempe, who is the Chief Investment Officer and co-founder of IMMO, which is a really cool Series B PropTech that has, I think, a really interesting product, platform, is doing something truly innovative on both the financial services side and on the technology side. So welcome to the show.
Thank you for having me.
Thanks so much for joining us today. I have so many questions. I think a couple areas of focus are about, first of all, the difficulty of change and transformation in the real estate industry. I think I've pointed to the excitement here about what you're doing, and I also know how difficult it is, from my perspective, to get people to shift mindsets and to get them to understand the opportunity in something new, not just the challenges. I'd love to hear a bit about your founding journey, because I know the folks who listen to this really love hearing the personal side of what motivates people to get into property to begin with, and also into technology, and thinking ahead to the future. I mean, none of us have a crystal ball, but I think as business builders, we like to believe we do. We at least like to talk as if we can.
Yes.
Think about what the world is going to look like in 2, 5, and 10 years. So yeah, I think high level, I'd love to get into all of those topics, but perhaps starting from the beginning, why real estate for you? What lit the fire?
So my journey into real estate was completely by accident. I was doing a degree in industrial design and technology, but I very quickly realized I wasn't going to be Steve Jobs or Johnny Ives or James Dyson, and I realized I didn't want to be sitting in a cold workshop sort of making innovative furniture pieces or things like that for the rest of my career. So, and realized I need to make money. So I completely fell into a real estate internship by accident at Cushman Wakefield. Honestly, I blagged my way into the internship. But once I was there, I very quickly realized that I actually really enjoyed the built environment. It just made a lot of sense to me. I looked at other parts of financial markets and just didn't enjoy them as much because they just felt a lot more intangible. And that's what I really loved about real estate it's all around us every single day. It is involved in every part of our lives, whether we realize it or not. And I just really liked the ability to have that impact on an asset class that actually meant something to us every single day.
I love that. I couldn't agree more. I think it's such a great space to be in when you can be touching at the most abstract level, extremely high value transactions, while also looking around you as you're walking every day, enjoying architecture, enjoying how people, these days, having worked in design, thinking through architecture, thinking through where you put a barista stand in a particular building, has so much thought behind it.
Yes.
And you're like, oh, the number of steps between this door and where I need to pay. Someone's thought about that. And so it impacts people at this incredibly practical but also emotional level. When I walk into the offices of course, some of the clients that we work with, they've put a lot of time and a lot of money into designing a space in that waiting room before you walk into a meeting that's going to really impact you. It's going to be grand. It's going to be emotional. And I love that about real estate, that it can be both. That you can be talking about hundreds of millions, billions of dollars in transactions, and it's also just like, this room I'm in has great light.
Exactly.
So how did it grow from there?
So started off in an internship, continued hustling my way around the business and introducing myself to other parts and asking if I could keep extending my internship, coming back for more internships during various holidays, and then eventually got offered a graduate scheme. And then post the graduate scheme, then there was GFC was happening, so there was a lot of movement within the business, within the industry. At the time, I was sort of looking to figure out what else to do because I was in corporate finance at the time, and there wasn't really any equity to raise, and there was no debt to broker, so didn't have a huge amount to do. Completely by chance met one of the partners at PwC who worked in the business restructuring team, and obviously there was huge amounts of business restructuring and insolvencies going on at that point in time, and it felt like that was actually the busiest part of the market at that point, and I wanted to be wherever the action was. So managed to get a role in that team, and that was great. And then managed to convince PwC after a few years, to send me to Blackstone on a secondment when Blackstone started buying up distressed debts from various banks. And that was a 6-month secondment. That was probably the longest interview process and most intense interview process you'll go through. And Blackstone offered me a role at the end of that. So I originally was on the debt side, and then as the market was starting to pick up at that point, I moved over to the direct investment side and was a portfolio manager there, doing a lot of working on various sort of asset management projects for a few years. And then it was whilst I was at Blackstone, they built this really exciting business in the US called Invitation Homes, which for people who aren't familiar with Invitation Homes or the story, there is basically Blackstone post GFC, they realized there was a huge opportunity to start buying up granular single family residential assets because they were being sold at pretty cheap prices. They would be able to buy significantly below replacement cost, and the original thesis had been, we'll rent them out in the meantime just to keep them occupied and get a bit of income, but then when the market comes back, we'll flip them and get the capital uplift. But what Blackstone realized very quickly was actually they were getting the most incredible, sticky, stable income stream, and actually managing dispersed portfolios of residential was not as difficult as people had originally assumed it would be. Obviously, you need to have processes, and you need a bit of technology, and you need to have operational scale to get those efficiencies. But it wasn't as impossible as people had thought. So they realized actually we have this incredibly sticky, stable income product, which is perfectly matched to pension fund, insurance fund type liabilities, where obviously the low volatility of the income and having that long-term outlook is incredibly important. So Blackstone really doubled down on this strategy, and as with many things Blackstone do, other people follow. And I think by about 2020 to 2021, there was about $60 billion of institutional capital went into the single-family rental space in the US, and of that, the majority was into this existing dispersed sector. It wasn't into sort of just big new build single-family estates or schemes. Anyway, so when I was at Blackstone, I saw this happening over in the US. After I left Blackstone, I went to do my MBA at London Business School and knew I wanted to do something very entrepreneurial. Knew I wanted to do something with technology, but having been in the real estate space for so long, I hadn't been exposed to technology much at all. So that was definitely a gap for me. But during my MBA, I by chance met my co-founder, Gigi, and he came from more of a startup tech background as well, though he came from sort of investment banking before that as well. And we realized that there was an opportunity to do something similar to Blackstone, but over here something similar to Invitation Homes, but over here in Europe. Because even back then, about 7 years ago, there was huge demand for residential from institutions, and they were really struggling to figure out how to find the institutional type supply. And we realized that if we could create the technology platform across the whole value chain that allowed us to unlock those inefficiencies through technology, remove a lot of those traditional manual processes, we could unlock what is actually the largest asset class in the world. The residential market in Europe, it's over 40 trillion in value. It's larger than the US, and I think just on an annual basis, there's about 1.8 trillion euros of residential transactions every single year. And of that 1.8 trillion, institutions currently only make up about 4%. So institutions are ignoring 96% of this huge asset class, the biggest asset class in the world, and when they have been only increasing their allocations to residential over recent years and are all struggling to find the right supply, it made absolute sense to us that if we can figure out a way to unlock that 96%, we can make it accessible for institutions to be able to acquire smaller ticket sizes. It doesn't have to be as small as individual, £200,000 houses. That's at like the most extreme end. But, there's a lot of institutions who won't even get out of bed for anything less than 100 million pounds or euros. And there is a huge volume of stock. That 96% I referred to, the majority of that stock is anything from, as little as 2 million euros, but, it can be, 20 million euros as well. So there is a huge volume in this more granular space. And the reality is doing a deal on a 10 million euro property is pretty much the same amount of work as if it was 50 million or 75 million, right? So when resources are constrained, of course, institutions today, they want to focus their time on doing the bigger ticket stuff. But this is where we got very excited that the technology can really unlock the ability to start targeting the smaller end of the market, which is where all the volume is as well.
So as a fellow, it's really helpful to understand the journey and to really understand the business thesis and where it comes from within your experience and your passion for solving that particular problem. As a fellow founder, of course, I'm hearing a lot of the things that I would get excited about in an opportunity, right? You see an untapped marketplace, an even bigger one than the United States. And I think people underplay the amount of geographic and regulatory diversity there is in the United States. And so I would have an immediate response to people who said, yeah, but it's Europe and you're going to deal across different environments within different nations, et cetera. I'm like, yeah, you do that in the United States too. So I would already abstract away from that problem, but I'd be interested to dig a bit deeper into it. The other part of my brain, though, immediately says, like, Blackstone had an enormous amount of money to do that, though. And you're some founders who are going to go and try and raise capital on this thesis and also get the CapEx to deploy into these homes. That sounds pretty daunting to me, to be honest. How are you thinking about that at the time?
We thought it'd be a lot easier than it's turned out to be, if I'm honest. And I think
that's good.
That was probably a good thing because we were blissfully naive about how difficult it would be to raise capital. But yeah, no, we started off, and obviously we knew that we couldn't go straight to big institutions. We started speaking to institutions, but we were really learning a lot and getting feedback about why we couldn't work with institutions from the outset. And that was really down to, track record was the main thing. We just didn't have the track record or the proof or the evidence yet. So we started raising capital from family offices. We actually started in Germany at the time as well. We tried to raise capital initially in the UK, but I think, just trying to think back at the time, I think interest rates started to go up a little bit at that time, and some of the capital we had, the numbers work out anymore. And we had family offices in Germany who were very comfortable with residential as an investable asset class, because the German resi market is obviously a lot more mature from an investment thesis than it is here in the UK. So we were able to get a lot more traction with people over there, and the interest rates were lower at the time. So yeah, the numbers were stacking up more easily at the time, and we could raise the capital. So we got started with family office capital there. We did various sort of a number of family office portfolios. Sort of worked mainly within a couple of different cities in Germany, and then after a few years, we were able to start raising capital from large institutional investors, and we had our first very large commitment of close to $1 billion back then from a large institution, and started sort of delivering on that. And operationally, that's been fantastic. The team has been incredibly motivated to make these portfolios a real success on every metric that we're being measured. So yeah, the team's done a really fantastic job there. The thing that we obviously couldn't control has been the markets and interest rates exploding, and as with the whole market, it's therefore made deals incredibly difficult to do over the past few years, where just numbers just haven't been stacking up at all. But the positive thing is at least that now the market is starting to come back. I think past few years it's mainly been value-add capital out there, and value-add capital on residential is really difficult to get unless you're prepared to take outsized risks, especially around development, ground-up development and planning. So that's been very hard. There are more value-add opportunities now, and especially in the UK, we're focused on sort of permitted developments, like office to residential style opportunities, where you, especially if you've got the permitted development consent in place, you're not exposed to big planning risks, and then because you already have sort of a building in place, you're doing a heavy retrofit on it, but you're not taking the same type of ground-up development capex risk that you would be if it was you were starting from scratch. So that's an opportunity that we're getting a lot of traction on at the moment. But another positive thing is that we are starting to see core plus capital come back. We see more core plus capital in Germany than in the UK at the moment, but at least it's starting to come back. The door is definitely not flung open with everyone rushing to come in, and I think all the geopolitical issues that have been happening the first 6 months of this year have definitely put the brakes on a lot of investors who had planned to be sort of entering the market. So I think it's probably going to be till next year before we really see a huge uptick in activity, but at least the door is starting to open.
Yeah, I think we see that in both the CapEx market and in terms of raising venture capital, right? And in closing a next round to continue the operations of our business, that all of the geopolitical unrest, people make different decisions, have different risk appetites. And as you said there, so many things can change over, how many years have you been running this business now?
7 years, I think now,
Yeah, and how many economic cycles do you think you've lived through with the business in that time?
Well, it's more black swan events, right? It's, obviously there's Brexit, COVID, all the, Putin storming into Ukraine, interest rates exploding, and then starting to thinking that they're starting to settle back down again, and then you've got Trump coming in and all of the drama that's created, and now more Middle East unrest. So, yeah, there's been a lot of black swan events that I don't think any of us, none of us can predict any of these types of things within our business, and we just sort of have to do the best that we can.
Yeah, I don't think any of us could predict any of them necessarily individually. Of course, the intellectual catch-22 is you have to expect the fact that black swan events will happen when you're planning your business, and that there will be some high magnitude impact on the supply or demand side. And I think that's especially true of working in an industry like real estate. It's interesting, as you were talking, I think the platform, the idea of getting institutional investors more interested in and enabling them to invest in these types of residential properties at scale is a super exciting proposition. And then there's so much complexity in the different submarkets within that, even that you've just talked about here. And having only been in real assets myself 8 years or so now, every day is a school day for me in this sense. And some of the opportunities that you mentioned, I wouldn't have even sort of thought of as a good application of that platform or strategy. So how do you figure out where you're going to go in each of these marketplaces, if you're talking about a marketplace as all of Germany, as a submarket within Germany? How do you and your team say, I think that's the gold mine, right, that we need today?
Yeah, that's
when
hard.
It's a huge realm of possibility, right?
There's a lot of things that we could do. So we come at it from two fronts. We come at it from, what do we want to build as a business? Because we're a tech business, we have technology underpinning the business, and we want to create efficiencies, we therefore can do that, have a lot more impact when things are more predictable and repeatable. You need processes to be predictable and repeatable, which means that ideally we're not doing strategies that require operational gymnastics in every single direction. Real estate is real estate, and there's always going to be nuances and unique attributes of every single deal. But 80-20 rule, we'd prefer to be targeting strategies where 80% of the processes required and the operations required around a deal will be pretty standard. We can make them relatively cookie cutter and develop more technology around those processes. So that means, we're not going into ground up development types of opportunities where, you've also got so many external factors around like planning departments, and the issues around each planning department can be so unique, dependent upon which borough or council you're talking to, and even, down to individuals within the council and things like that. So there's a lot of unpredictability around those types of processes that we don't feel we can add as much value with the technology if we're looking to create highly repeatable processes. So that's the kind of the first thing. And then the second part is really about what are the strategies that institutional investors are going to be looking for. Because I mentioned the invitation home strategy over in the US, and where that is very much aggregating individual single-family houses in a very dispersed nature. And I think lots of people can understand that and appreciate it and say, yeah, that makes absolute sense. But what we found is, from an institutional perspective, institutions in Europe have not been able to get their heads around the dispersed nature of those types of portfolios over here in Europe at such a granular level, where you've got houses that might be, £100,000, £200,000. So we still very much believe in that as a thesis, especially when there is such a huge brown to green opportunity around that. I think there's a huge role institutions can play in helping decarbonize that type of housing stock. But I think it's too early for institutions here in Europe, if I'm just being very, very honest. So in the UK, our strategies are focused on, there's the permitted development, the office to resi conversion opportunities. We also look at multifamily assets, like smaller new build multifamily assets that could be anything up to sort of like 30 million, anywhere from sort of 10 to 30 million around sort of London and Southeast, because I think at the moment a lot of institutions have a lot of belief in the sort of the London Southeast recovery story coming through over the coming years. And there is still a lot of multifamily housing that was built to sell by more kind of SME type developers, not the big tier one developers, but more SME, where they haven't been able to sell the individual units as they had originally anticipated, and they're now very close to reaching completion on these schemes, and the bank is basically knocking at the door saying, you've only sold like 20% or something of this. You need to think about selling the whole block because we need to get the money back on the loan. So there's some good opportunities that we're seeing around that, where actually you're taking very low risk because you're buying in at a discount, but you're buying a PC building already. You're not having to take any capex risk there at all, and all you're doing is taking lease up risk. Where in such an undersupplied market, such as in London already. That's, it's a no-brainer. The other strategy that institutions are also quite interested in at the moment is obviously aggregating single-family housing, but from developers. So there's a lot of the big institutions are chasing the big house builders and sort of buying big chunks of their schemes. Where we've got more interest from capital partners is to be targeting, again, the SME developers where they were building to sell and they haven't been able to sell. So being able to, again, buy at a discount, buy in really strong locations, and with the thesis being, you aim to aggregate these types of schemes, whether it's 20 units, 50 units at a time, with, again, you're not taking any development risk, you're just taking the lease-up risk, and then at the end of the day, in sort of 4 or 5 years' time, you've got a stabilised portfolio of single family that you can then flip on to one of the big core players who are at the moment currently aggregating from the big house builders. So that's in the UK. So they're quite distinct strategies, and it's taken us a little while, if I'm being very honest, taken us a little while to really narrow down on those because we've had to review so many different types of strategies within the residential space, and these are the ones where we've had the most appetite from our capital partners. And then in Germany, it's actually a lot simpler. It's really just multifamily assets, typically existing assets that need to be retrofitted, where the work you have to do in Germany is quite different because the market is a lot more mature and it has a lot of rent regulations in place. So lots of the strategies there are very focused on the retrofits, about raising EPC standards, taking it maybe from a D or an E, or maybe worse sometimes, up to a minimum of a C, ideally going to an EPC B. And then you can start to do, the knock-on effect of also doing those CapEx works, those modernization works, is that you're able to start actively managing your rental income a bit more. The regulatory framework allows for you to increase rent slightly if you do X, Y, Z to the building. So there's no silver bullets on that, that strategy. There's not one single thing that's very obvious to point out for driving the returns, but it's lots of very incremental small steps. But as I said, what's good about it though is it's pretty cookie cutter. It's, as I said, because the market is a lot more mature. There's a very established rent regulation framework over there that is very transparent, so we know what sort of boundaries we have to work within, and we can apply those rules to sort of every deal that we're assessing.
Yeah, it sounds like you've learned an enormous amount from the seed of the idea for IMMO and Innovations Homes, and then I suppose the way I would view the process of narrowing on a few business strategies would be you have your vision, and then you have market or investor sentiment, which is always changing for some of the exogenous reasons that we mentioned, other reasons that maybe even be opaque to us from outside of those businesses, and you're finding the intersection between those things.
Yes.
And then you're repeating that and saying, okay, I think there's a bigger market here, and let's see how many other investors might be interested, right, in this particular strategy. When I consider that, I go back sort of to the idea that now you're doing something even more operationally complex than the thing that was being accomplished that seeded the idea for the business, with probably fewer resources. So how have you squared that circle? What's the evolution of your team been like? What skills do you need to deliver against that platform and that service? And what role is the technology really playing?
Yeah, so the technology to date is predominantly focused on the acquisition end. I think once we've kind of heavily scaled up more of the of the AUM and the operations side, we will start investing a lot more in the technology there as well. Because today we have the asset management in-house, we do the development management in-house, and then depending on the market, we typically subcontract, whether it's the leasing or the property management piece. And because we don't control all of that in-house, there's, this when you really benefit, when you're building technology, you really benefit from when you can then actually really control the people using the technology and making sure the right data is going in and all of that sort of stuff. So we've we've been developing out tools on the development management side that allows us to do CapEx calculations incredibly efficiently and to be able to have oversight and manage our CapEx projects and be able to, monitor and flag them, flag any issues, and sort of do all the kind of the onward reporting required that goes up into our asset management layer. And then the asset management, we've also built out the sort of platform internally for us to be able to monitor and have oversight of our various projects and portfolios, and so that we're not having to wait at the end of every quarter. What typically happens in a large institution, you get to the end of the quarter and then you have a few weeks of where you're trying to reconcile multiple different tenancy schedules. You don't have a single source of truth often, and and then you do your quarterly reports, maybe a month after the quarter date, which to us makes no sense when a lot of that information is months out of date already. How can you be making dynamic, and very proactive, decisions on data that can be months out of date? You should have been taking action when the action was required, not months later. So we've got all of those kind of systems set up for our sort of operations, sort of asset management teams. But a lot of the technology that we're really focusing on at the moment is very much at the acquisition end, about how we identify opportunities, how we screen, how the deals come in, how we screen them. I think quite similar to what you guys do, but obviously we're just very, very narrow in our focus in terms of asset class. But how we screen the deals, how we do initially high-level underwrites with only a limited amount of information that is coming through the PDFs or the rent rolls, and then allowing that underwrite to sort of travel along the journey as it continues to be enriched to, as we gather more and more information. The technology, the AI, the tools that we've got, they also allow us to, to do red flag reports, to identify gaps in the information, to identify conflicting information. The number of times I'm sure people have discovered, for the same units, there's multiple square meterage,
oh yes,
numbers for the same. You're like, which one is it? It can't be 3-4 different square meters. Which one is it? So being able to, and often you're only discovering that after you've done like forensic line by line analysis, and obviously the AI can really support in helping, flag those issues. It's not necessarily today, at least today for us, the AI is not telling us which is the correct one, but it's fast tracking the acquisitions team to be able to then find the source of that information and be able to then, take a view on, okay, it's the second one rather than the first one or whatever it is. So that's really supporting us in how we sort of are due diligencing and digging through the details and speeding up the process for us so that we can manage a higher volume of deals at any one time. And then that goes all the way through to creating our investment committee memos where, it's auto-populating large chunks, the majority of our investment committee memo, whether it's giving, we sort of categorize, break down the information that's being presented. So you've obviously got high-level asset information about the physical asset. You've got location analysis that's going on, and we've got, a separate kind of module that's doing a lot of that location analysis. You've got the financial analysis, all the returns there. You've then got all the comps that are going into support. And again, we have a separate comps AI tool that we've built that allows us to identify and select what are the right comps and then sort of auto-populate the investment committee memo. So,
I mean, that alone is a problem most real estate businesses get stuck on, right? I'm looking at several different and disparate data pipelines for comparables, and I still need many different humans to make a judgment on, that garden isn't the same as that garden. This is never going to be considered a comparable.
Exactly. And I think, AI can... So how we're using it at the moment, the AI is combing through either the actual, quantitative information around the comp, but also reviewing the photos to try and estimate condition and take a view on what the condition is, because obviously we know condition can have a huge impact on the value. But the tools that we have at the moment, it's not taking over from the role of the human, the role of the person. what it's doing is it's cutting out a lot of the painful work and presenting a long short list of saying these are the top 20 rental comps that we've identified for this building, based on what we've been trying to sort of search against. And then the person is still going in and sort of double checking, but they're not having to do this horrendous painful exercise of like scrolling through Zoopla, Rightmove, or whatever, trying to find comms and then copy paste, and then all that kind of really manual work. So it's not making any decisions, but it's fast tracking the process, and allowing our people to not have to do the really mundane sort of brain damaging work, which is frankly a complete waste of any relatively highly paid person, and allows them to really direct themselves to the value add piece.
Yeah, that's absolutely right. And at Fifth Dimension, we always talk about augmenting real estate professionals rather than aiming to replace their roles, and whether it means that allows you to do more deals more scalably,
Yes.
spend more time with your tenants, spend more time with your clients. I think it gives you joy back in addition to being a primary revenue generator for your business. And I think even if tools are going to make a recommendation about what's correct, right? So maybe we have an 80% confidence rating that, right, this is the right judgment. We can play that back to you, show our agents reasoning behind that decision. It's still the human being who's going to say, well, I agree with that part, but like at the business I worked at before, you wouldn't know this AI agent because you don't have access to those data.
Exactly.
I've seen an asset like this and things played out terribly, and I'm doing my own pattern matching here.
Yeah, and I think that point you made about being able to break down the reasoning as well and be able to show a very clear audit trail and justification and being transparent on that process, because I think what a lot of people are very scared about, especially when it comes to AI, is that it's a black box and they've got no idea or transparency how it came to any conclusions. And I understand that. I do get that. Years ago, when we first started out, we started with sort of like machine learning, AVMs, like automated valuation models. And we quickly scrapped that because we actually realized there was no institutional investor that we were working with, unless you're a Zoopla and you've obviously got Home Track, and the mortgage banks use it for sort of updating evaluate, but obviously they're completely dedicated to that, and they have access to insane amounts of data that they can get to confidence levels and accuracy that you would be prepared as a mortgage bank to have a bit more of a black box view on that, but that is not the institutional investor market that we operate within. And the reality, no one would be willing to trust a black box. And one of the investors said to me one day, it was like, we can't hold technology to account, but we can hold you to account. We can hold a person to account, but not the technology. So there is, I think within our space, we could never say, oh, but the AI said it, so that's why we did it. So we need to have full transparency. And I'm sure it's similar to the way that you've done it, but we don't just say, AI tool, do an underwrite and tell us what the returns are going to be. It's actually taking that entire underwrite process, it's breaking it down into its micro steps. For example, your CapEx numbers. We have a separate CapEx calculator tool that we've developed, and that has then gone and been signed off by Drazen Summer and CBRE, and they've like kicked the tires on it to challenge the robustness of it, and that's a separate tool. We have a comps AI tool. All of these, and these might have different LLMs operating within each of them, because different LLMs have different strengths and weaknesses, and you need to be able to pick and choose. It's not about just dropping a single PDF into like Gemini or something, going, Gemini deep research, do my underwrite for me and produce my investment committee memo, and I just need you to look at X, Y, Z. That will never give the transparency. And I don't think it's the right approach either, even if, you wanted to trust, you just wouldn't trust it, because you need to be a lot more, you need to break down the steps a lot more and have a lot more control over the various elements going into it, and then be able to create that output at the end that is very auditable. And from a governance standpoint as well, obviously it's very important to the institution. So all of our underwrites that we do for every single deal will have an Excel file coming out of it as well. that can be sent to our capital partners, and they will kick the tires, they will play around with it, do their own stress testing on it as well. And they can see that, it's something that they recognize and they can touch and feel, and, is, can then be stored on a file on their end for governance purposes and things like that. So I think when people worry that AI is just going to create this black box, I think that's really the wrong way to look about it. And I think, people such as yourselves and IMMO, hopefully we're trying to change people's perception of what these AI tools how they actually operate.
Absolutely. I couldn't have said it better myself. I think when I often talk about the value proposition of Fifth Dimension's AI native platform, I go into detail saying, look, if you are the director of asset management at your business and you're talking to your analyst, you know what they're doing, that they've created a deal memo off of the back of a cash flow model. You know what's contained in it. You know the input assumptions. You know how the outputs are supposed to be presented. You know that if you were to train a new junior analyst to do any of this work, you would have to sit there and break down each of those tasks into a series of subtasks and be quite instructive about how that work needed to be performed, right? You go to this piece of software, you click these buttons. Here we're talking about NOI. The definition of NOI is, here's how you would validate the answer once it had been calculated. The benchmarks for NOI for this particular type of asset, right, in this particular type of industry is, here's the data sources that we trust for that benchmark. Here's, the internal benchmark. Here's how we do market analysis, et cetera. And then you go through thousands of subtasks for even, some relatively simple aspect, right, of that work at a small scale. And that's exactly how you have to explain it to a computer. And not only that, but as you said, the way our platform works is we're going to be running, on average, 75 models at any given time, including document retrieval models, large language models, et cetera, because you can't hire an accountant to do an asset manager's job. And that's exactly what a lot of people try to do with technology, because they're like, oh, this AI thing, this is really exciting. Of course I should be able to hire anything that OpenAI makes to do any job, right? Because Sam Altman's over there telling me that this is the future of, generalized artificial intelligence. But as applied to an enterprise industry where people have been doing the work and need the work to be ready, that you can dig into it at a granular level anytime you have a question, right? Was it my market assumption that was wrong? Was it the actual state of the property, right? The bathrooms were really abysmal, and that's why this valuation hasn't been realized. That's why I haven't gotten my returns. If you're debugging an investment and then trying to have a feedback loop to make better investments, you need to know that information. Those data are there when you need them. Even if you're only being handed an executive summary, there's going to be a point in time when you're going to want to know. Yes. And so that's why Fifth Dimension's really leaned into playing back the reasoning, because why do we also love analysts, or thinking back on your Blackstone interview process? I have some friends that have described this to me. It sounds very in-depth, let's say. You can get that person in the room and be like, hey, but why? And if you can't defend your assumptions that have gone into a decision-making process, then you don't belong in finance and real estate. Yes. And I think the same is true of an AI tool, right? Yeah. You don't belong here. You need to do the thinking before you give me the output.
Yes, correct.
So how have you figured that out, not having a background in technology, right? You're talking about this in an incredibly sophisticated way, and you've been able to identify a co-founder who clearly works for the business and works with you. But how did you know he was right when you first met him, and how has that relationship evolved?
Yeah, it was very sort of organic. So we didn't know each other before we came together as co-founders. There was a founding investor who actually connected us. So I won't take any credit for sort of being super smart in how I identified my co-founder. So I think it was a lot of luck, if I'm very honest. And yeah, we've sort of had to learn each other and how each other operates and where our strengths and our weaknesses are. And I'm very much the real estate expert, given my background. And, he's more the startup. He focuses on the VC discussions and oversight of the tech teams. But then even then, we've, neither of us are like technical technology founders like you are, for example. So we have had to rely quite heavily on trusting our sort of heads of technology. So our head of product at the moment, our chief product officer who acts as our CTO as well, Ali, he's excellent. He's really fantastic. And I think one of the mistakes we made early on was trying to do too much because we cover the whole value chain. For better or worse, we feel we have to control the whole value chain because it's pretty essential to be able to have, to be able to control and make sure that the operations are correctly executed.
It gives your CapEx investors comfort, I would assume.
Yeah, I think it's really important that we have oversight and control of that whole value chain. But then the challenge has been trying to build everything at the same time. And I think one of the huge opportunities for the real estate market is that there is so much that needs to be built. There is so much disruption at every single stage of the value chain. You could create probably like 5 or 10 different PropTech solutions, which could be independent companies on their own. You could do that at every single step of the value chain. So I think for us, the challenge or the mistake that we made in the early days was that we tried to build too much, which is why I was saying actually we made, our focus very much now has been on the acquisition and transaction management end of the value chain. We've built what we've had to build on the asset management and the development management end for us to be able to enable, and support actually the acquisition end, but also then to be able to competently, and smartly manage the operational end of the value chain. But there is so much we have on our wish list for that operational end. But we know that, the focus has to be on the acquisition and transaction management end. And as we grow our AUM, then, and as we establish and mature the acquisition end, our shift will start to focus more onto the operational end.
There is so much space to add value. I also struggle with that problem. When you think about that, how do you and your team make decisions about build versus buy? Which aspects of this do you really need or want to be your intellectual property?
Yeah.
And which elements are you saying, 60% of this work, it's good enough if someone else does it right now, and that's going to help us achieve a better outcome for our investors?
Yeah, so we're not precious about building for the sake of building. We only build where we feel it's like an absolutely critical piece of technology and where it needs to be, and as a result, it needs to be so bespoke and, needs to be able to do what we want it to do. Like, we're not prepared to sit in a queue of other clients, for example, and, maybe in 6 months' time, there'll be how we want it to be operating. So, because acquisitions are such an integral part of our business at the moment, we only met you guys recently, but so I know you guys have done so much around the space, but we'd sort of started building and, we sort of got to a point where we're like, actually, we're far enough on that journey ourselves. And, there's a lot of, it really is enabling what we do every single day and is therefore very, very integral to the business. But as an example, on the development management end, so we've created our own CapEx calculators internally. We couldn't find anyone out there who was doing CapEx calculators to the accuracy that we wanted, so we built it ourselves. That's why I said, we showed it to Drays and Summers, CBRE, and they're like, oh my God, we've been trying to build something like this or trying to find something like this for 10 years, and we haven't been able to, but we'd managed to build it. But then there's also DM sort of project management tools out there that are good enough, as you said. They're good, actually. They're pretty decent, and we don't feel the need to try and replicate that or build that. It'll be a total distraction of our resources, and if someone's done it better than us already, we're very happy to bring that in and plug that in instead. It helps us when we're not having to be distracted with those sorts of elements. So, as I said, we've built a bit on the asset management end ourselves, but when it comes to really focusing on and doubling down on the operational end, if there's other people out there who are doing it really well already, and I can't say I've come across a huge number of property management systems and things where everyone sort of thinks they're incredible. I think most people just sort of put up with them because they have to put up with them, and they sort of try to mash things together. And that's what we've done as well for now. But yeah, when it comes, if there is a new entrant to the market who sort of blows everyone out of the water and we're like, oh, that's amazing. We don't have to build it. We'd just rather use these guys. We're happy to do that instead.
That sounds very pragmatic, which is not often a type of answer that I hear, which I really appreciate. I think that's exactly the right attitude. And I think you're uniquely positioned to offer a perspective here because you are both a property services business and a technology business. So it's good to hear sort of your perspective at the intersection, right, of those interests and saying, yeah, of course, we build where it's critical to get it right, particularly in the context of our business and our institutional investors. And if something out there can get it right or right enough, and it's not top of our priority list for our top line, then we park something else in that space for now and maybe earmark it for later development.
Exactly.
But if someone else comes out and blows it out of the water, then you just move on to the next priority.
Exactly. And I think there's enough work to be done, well, first of all, on what we are building, but not just on building, but also knitting together those different solutions that come in and making, it's sort of the very unsexy parts of technology behind the scenes of how, whether you've built it yourself or if you brought it in from a third party, how it all plugs in and knits together so that your workflows can connect, so that all your data is flowing up into a centralized place. So you still have a single source of truth. And, your asset managers can, do their dynamic reporting and have real-time information on the portfolio. But then also that information can flow back through straight away on a real-time basis to your acquisitions team. And they've got sort of live comparable or operational data that they can be feeding into the underwrite. So there's a huge amount of work as well that just goes into that sort of infrastructure that I think not enough people focus on. And I think that's a big issue within the industry, is that there's a lot of incredible solutions, whether it's what you guys are doing or other parties. There's amazing individual solutions along the value chain. But I still think a lot of these big institutions, they need to do they also need to focus on the absolutely foundational basics internally of getting their data infrastructure in place. There are some, fund managers that I speak to who, they've got a head of innovation, they've got a head of technology, they sit on these technology PropTech panels and things like that. But then when you actually talk to them about what the setup is internally, and these are big global international funds, they still don't have a data lake in place.
Or they do, and most of their data doesn't sit in it. I hear that one a lot.
Yeah, it's sitting in all these different countries at little regional offices, and and that's why quarterly reporting is takes weeks or so,
And they have Argus, but they have Yardi, and they use spreadsheets and
exactly. And just having a centralized and unified data infrastructure, I think is absolutely essential. And it's not the sexy topic. It's not what loads of people want to talk about on PropTech panels and things like that. But I think if that does not get solved within a lot of these big institutional investors, I think a lot of the solutions that we're creating, the PropTech solutions that we're creating along the value chain, will hit a ceiling. Because if the value of a PropTech is limited to that vertical that it's operating within, and the output from it can't be ingested into the business, it can't then be taken along the data's not going into a single source of truth that's going to be used by someone else. The workflow can't be connected. I just think that's it's a huge missed opportunity. It doesn't mean that there's not value to be created by the PropTechs. There absolutely is, but the full impact of those PropTechs is going to be limited. And I think it's for the institutions to figure out themselves how to, we can't, the PropTechs ourselves, we can't fix the internal data infrastructure of these organizations.
Yeah, I think that's right. We can help them.
Yes.
We can't solve their problems for them. And so in building Fifth Dimension, we talk a lot about how we want to be the workflow automation layer that sits atop all of your file folders and data services. you still have to help us do that, right? If you have a whole bunch of people running models on spreadsheets and they do not feel responsible for, version 18 final ending up in Argus, right? I can help those systems talk to each other. But at the end of the day, to go back to a prior point, you still have to impose a culture specifically of data accountability. And what I think about the great thing about an AI native platform like ours that's facilitating this kind of work being done by computers as well as humans, what is the purpose of it? For me, the purpose of it is closing the loop from data or insights, more importantly than data, you derive insights from them, to action, right? And I remember the day, however old I was, still very distinctly and viscerally, when I learned how few insurance companies price their insurance products based on past claims. And I think about this sort of in a real estate environment as well, where you have transactions teams over here, you have asset management teams over here, you have portfolio performance reporting to a point that you made that maybe happens on a quarterly cycle. Now that's compressing as technology gets better and data gets better. But how do you know how to make better decisions if that loop is never closed?
Yeah.
All you're doing is kind of relying on, and in some ways I might even get spicy and say real estate likes to rely on, the expertise of individuals with decades of experience to be what's actually threading together the data loop rather than a system.
Yes.
And we know how fallible that is.
No, I agree. And I think, to your point, these are huge change management programs that are required internally. So I don't sort of take away that, it is a huge mountain that these institutions need to be, climbing to, like you said, it's change management, culture management. What I think is positive, though, and where I'm quite optimistic is because of the explosion of AI over the past 12 to 18 months and how much that's impacted individuals on a personal level, whether you're using it in professional circumstances for doing research or things like that, or, whether you're, looking up cooking recipes or travel ideas, or you're just doing kind of history research on something you saw on holiday, whatever it is. But people are using a lot of these AI tools on a personal level, and they're seeing the impact it can have. And as I said, starting to bring it more into the workplace and, help speed up their sort of day-to-day tasks. So I'm hoping that because of that, there'll be more of a bottom-up pressure within institutions, because I think all the technology that organizations have been trying to implement, or the desire for or the need for technology, the desire for technology, it's all been coming very top-down. And when you don't have buy-in across an organization for that, there's huge amounts of resistance, obviously. But I think people are now, on a very personal level, experiencing the benefits of AI. So I'm really hopeful that actually this bottom-up and this top-down approach will start to unlock, things moving faster within the industry.
Yes, that's why I think this is a different technical revolution that has happened before in real estate, specifically because our most successful clients, 2 years on, for example, in working with us now, they have both a top-down strategy to make sure it's not, spray and pray across 1,000 AI suppliers that is only making the problem you've described worse, right? But they're not just saying, hey, business, we need to use the same amount of resources, spend the same amount of money, and make more money. Can you just sort that out with technology somehow? Which I feel has been kind of the narrative, whether people are framing it in that way or not, for a long time, with trying to force real estate businesses, people underneath their level of the business, to adopt technologies to drive meaningful efficiencies and make better decisions. Whereas now, as you say, because people are so excited by these tools and how they're cropping up in their lives everywhere, and it means that if you're an analyst today, you can work at a business where you can, still have dinner with your partner and have a dog and a life rather than being up till 4 a.m. crunching numbers because someone asked you to change an assumption in a model. Obviously, you're going to be motivated personally to help the business on its digitization journey. Yes. And I think you have to have those two things coming together to affect real change. So that's what excites me when I get up and say, sure, we have some of the same problems in this industry that have existed for decades. I think now is actually different. Yeah,
I agree. I think the parts of the industry I am still a little bit more concerned about is probably more the brokerage end of the market, where that is so reliant upon networks, tip-offs, getting information before someone else gets information, and having your black book. And, it's going to be hard, I think, for that part of the market to embrace AI and technology and, open up and create the transparency around, deals and opportunities, because that really obviously quite heavily impacts them and what is, their USP at the moment often.
I agree. Brokerage and advisory, I think, at both an individual and an organizational level, is sort of at the sharp point of what is my value now? What value can I bring? How do I maintain this sort of competitive advantage or fundamental value that I've had in many of these businesses for 100 years now?
Yeah.
What's my new revenue model as a person and as I think about the future of this business? And I'm interested to see where that all goes. But do you have any thoughts to leave people with on generally the future of how technology is going to change the real estate industry, and then anything specific about how you think IMMO is going to help drive that change?
Maybe I'll start with IMMO. I think IMMO is unlocking, as I said, the largest part of the asset class. It's making it efficient to be able to do smaller transaction sizes, which means you've got a bigger pond to fish in, you've got more opportunities to select from, to cherry pick from, which means you can drive better returns that way as well. And because you're fishing in a much bigger pond, you're able to deploy faster. And just being very blunt about it, it means for institutions, they can deploy their capital faster, they can start generating fees faster, both whether it's, the acquisition end or on the management end. They're going to be converting from committed capital fees to actually, all the fees that they can start generating once they actually have deployed. And whether it's residential or whether it's other parts of the real estate sector, I think, just unlocking these smaller but higher volume opportunities and allowing institutional capital to enter parts of the market that they've historically not been able to play in. I think technology is, has a huge ability to help institutions increase AUM over the coming years. And then as, just kind of general wish for the industry, I guess, it's, we always talk as an industry and acknowledge that we are really behind the curve. And we should be a bit embarrassed about that. And we should stop almost joking about it and actually start taking real action, because especially with AI at the moment, the rest of the world is changing so fast, and the real estate space needs to keep up. It needs to work hard to keep up, and it needs people to want to do that. And as I said, I think, the biggest momentum for change within the industry is going to come bottom up. So I would say to people that, everyone has to be an ambassador within their organizations for technology. Not just AI, but technology. AI is just one tool within technology. They should be putting pressure on their organizations to be advancing and implementing the right technology. Otherwise, there's going to be a real bifurcation within the industry of people who have adopted technology and people who have not. There'll be the haves and the have-nots. So I think it's absolutely essential, not just for the industry, but individual companies. They're really going to, the ones who do not adopt technology and move with the times, it's going to be painfully obvious who they are in the coming years.
I agree. And I think it's going to be a lot faster than people think. I think a lot of people are looking around saying, I can wait 2 years because is it going to be a pain I personally feel for 10, and maybe I'm at the end of my career.
Yes.
And I think there's a much more imminent and existential threat there than a lot of businesses have yet realized. And so my call to action, I love your framing there in terms of we need to take this seriously, because I do think I hear a lot of the same people at the same real estate and technology conferences making this same joke about, isn't it so funny we haven't digitized real estate for the past several decades.
It's not funny.
It's not funny, right?
It really is not
It's an
funny.
Enormous problem.
Yes.
It's the world's most cash-rich industry, and it's still running its highest value transactions off of spreadsheets to the extent that people think it's normal and okay and they can keep doing it indefinitely.
I agree.
And that has consequences for us all societally from a sustainability perspective, which we didn't even get to talk about, but always an excuse to invite you back. Yes. But yeah, I think if you're listening and you're a managing director, you're an SVP, you're a president, like listen to what the young, excited people in your business are doing. Watch what they're doing. How are they leveraging AI? They can become some of the ambassadors for change here.
Exactly.
Thank you so much for coming on, Sam. It's been a pleasure.
Thank you for having me.
And hope to have you back.